Hey, it's Tim. It's 9:25, and emerging markets really struggling with the inflation and rate hike risks. The problems in the Middle East certainly cannot be viewed as insignificant when you consider the geopolitical importance of Egypt. It's not a market that is crucial to global emerging investors. There's obviously a strong group of investors that invest in the EMEA space or the emerging Europe, Middle East, Africa space. So don't poo-poo it. And there's a lot of I think tension building. Egypt is not Tunisia. This is a country of 80 million people where I think you've got an enormous amount of influence by the U.S. in the region that relies on Egypt. So let's keep an eye on that. I think the other thing to watch, and it's indicative possibly of this overall risk thing, is the outflow on the EM funds. The last week is one of the bigger ones we saw since the beginning of the big pullback in 2008. So while I don't think that that's a precursor to a similar type move, $3 billion moved out the week 26, and you can see it. You can see it in not only just the heaviness of the indices, but you see it actually in the individual stock basis. Some of the more crowded trades are the ones that are getting killed, and it's been a very challenging couple of weeks for guys that are managing money in EM or guys that are obviously just investing along with these markets. So keep an eye out. I do think if I look in the markets across the Eastern European area, Turkey's pullback is really creating an opportunity for a long position, but the currency's move is that which has me a little bit more concerned than the underlying move in the markets. I'm actually going to Turkey next week, so we'll talk to some companies and have some real insights for you. But valuations there are pretty interesting. The banks look pretty interesting. They've been getting really hammered. The story in Brazil, and mentioned last night on Fast Money, the central bank minutes, which were the first minutes from Tombini's first sit down, and the concerns that they have over hitting their inflation targets are mighty, and I think that has people very concerned. The currency, though, has been holding in, and it's been holding in because the expectation is that they really have to do something. They would love to see the real probably 5 or 6 big figures higher, and if they are heightening, if they are raising rates, that's going to continue to put pressure on their currency, not necessarily take some of the brakes off. So let's keep an eye on all of those things. It's Friday. It's been a very tough week for global markets, despite the fact that if you look at U.S. indices, they trudge higher, and they trudge higher even with some earnings disappointments on some of the big popular tech names. So that's actually a sign not only that the fund flows have started to recede in emerging, but it tells you that people feel more comfortable putting risk on in developed markets, and that actually, even though markets are generally going higher globally, people may be pulling back their risk appetite. So keep an eye on that, and we'll talk to you soon.